I always tell people that you've got to do the look through, right? You've got to do the look through to the practices that are in there. How much of those practices are Medicare, Medicaid, cash, insurance-based? Who are the hospital affiliations? And so in an ideal world, I'm looking for corporate leases from big hospital systems that are putting their employee docs in there. And then it's easy for you then to pull the financials of the hospital system to see how solvent they are or not, right? Because your leases are on the commercial side are only as good as the companies that are behind them. And so even if the physician fails, they're still on the hook for that lease. And so they'll bring somebody else in on a sublease. And so for that, in the ideal world, it's an MOB where the hospital has a large portion of the leases and they're just sticking their own docs in there. The next thing down for me would be probably PE-backed, private equity-backed practices that have already sold. The docs are still partners. They're still on their earn out, which means they haven't gotten all their money yet. They're still earning that money out. The PE firm, if they're publicly traded, you can pull their data, pull their 10Q and their 10K, see how strong their balance sheets are, and how well they will hold up from a lease standpoint.
On today's podcast episode, I interview Eric Tait. Eric is an MD, MBA, and as an internal medicine physician, he started investing in healthcare properties and creating partnerships with his physician friends. Now he operates an asset management firm that invests in a variety of commercial properties. In this interview, we hear his thoughts on how he approaches evaluating healthcare real estate investments. So Eric, welcome to the Providers, Properties, and Performance podcast.
Hey, Trisha. Thanks for having me.
So I'm glad to interview you on this episode. You're an example of a physician who's also a real estate investor, and healthcare real estate is one of the assets that you have pursued, but you have invested in a variety of real estate asset classes and now created your own investment fund. And so why don't you share your background with the audience, how you started to explore doing real estate investing outside of your own healthcare practice?
Yeah, absolutely. So after I finished college with Morehouse College in Atlanta, came to Houston, where I'm currently residing. And I specifically did an MD, MBA dual degree program because I wanted to go to business school to kind of learn how to invest my own money. It was during that time at business school that I figured out very quickly that a stock's price had nothing to do with how well the company was being run or how profitable the company was. So it was at that point I decided that I really didn't want to be in the stock market. So I had to kind of figure out what it is that how I wanted to invest my money. And so then I looked around and figured out what are the ways that people become financially independent quickly. And the two major ways were through real estate or a non-service-based business. I knew that I wanted to practice medicine, so that put me squarely into a service-based business. So that took that out. And so then I went down kind of the real estate pathway from that standpoint of just learning it and just kind of getting mentorship in it and just trying to learn as many aspects of the different asset classes in real estate as possible.
Well, and one of the asset classes that you did start investing in is healthcare real estate. You said hospitals and sleep centers as an alternative, to stock market investing. So what attracted you to those property types?
Yeah, so interesting. So the hospital, and I completely forgotten about that. You're absolutely right. So the hospital was an interesting play, right? And that's morphed into a few different things. And if I had to do it over again, because it was a full service legacy hospital, I probably would not redo that investment. If it were more of a specialty hospital or a surgery center, I might look at it, but they don't let us lowly primary care doctors into those kinds of facilities. But yeah, on that one, I wanted vertical integration of my labor. And what I mean by that is, as physicians, we're kind of the last cog in the machine. We're the labor force that creates kind of the revenue in healthcare, but we participate after everybody else is eaten. And so if we think about a hospital, right, just as an example, the hospital gets what's called a DRG code based upon what someone comes in with, right? So they get this bolus of money that comes in the top, and then they pay their salary and their wages and all these different kinds of things, but they're seeing the money first. from that standpoint. And so as a primary care physician, there's not a lot of margin in what I was doing. And so a way to up margin what I was doing, in my mind, was to invest in the hospital that I was a part of. It was being sold. The physicians got together. The whole medical staff formed an LLC and basically went to the group that was selling it and said, "Hey, we need to be a part of this process. If not, you're going to basically sell a hospital without a medical staff." And so at that point, they sat us at the table. They brought in potential buyers that were willing to partner with physicians, and that's how that went. And it made sense for me because it was we were getting the real estate as well, and it was, I don't know, 30 acres in downtown Houston. And so for me, that made a lot of sense. I'm like, worst case scenario, we can always sell the real estate and be whole from that standpoint. And so for me, it was a way to dip into other revenue streams in healthcare that I was already doing. I was already sending patients to the hospital. I didn't have to change my practice habits. I could do what I would normally do, but not just get a paycheck from seeing the patients. I could also get one as a distribution from what the patients were already going to do in the hospital. And then this was before the prohibition for physician-owned hospitals went in place. And so it may or may not have been loosened at this point, but that was before all of that legislation went into effect.
Interesting. And then you said that this, starting down this path, you had some physician colleagues wanting to invest with you, and you started some partnerships. So how did those partnerships develop, and how did they end up?
Yeah, so it was much the same thing. And so when I first got out of residency, I started just buying single family homes and small apartments. And some of the physician colleagues that I had were just like, "Hey, what are you doing? This is interesting. Can we partner with you?" And so I went to a securities attorney. Interestingly enough, I didn't know if they could coming out of business school. So it's interesting what they teach you in business school in terms of what you can and cannot do from that standpoint. And so I went to a securities attorney. They said, "Hey, give them all this paperwork. As long as they make this amount of money, make sure you tell them you're going to lose all their money. If they still want to invest with you, you can raise as much money as you want to and go forward and be prosperous." And so that's literally what we did. We just were putting together groups of I would say probably 80% of our physicians right now, of our investors, are probably physicians. And so we just pool our money and go buy assets. And then that just got, over time, it just got bigger and kind of bigger in terms of the different types of assets that we would buy. And we're still buying to this day.
Well, you said that, you would, like, one of your lessons learned is you would have gone after bigger projects versus smaller projects. So talk to me about that.
Yeah. So interestingly enough, it's almost the same amount of work doing a single family home as it is doing a multi-million-dollar commercial property, right? It's, the due diligence might take a little bit longer, but in the end, I'll be honest with you, it's easier getting a commercial loan than it is getting a residential loan. They ask for more documentation. There's much more scrutiny on the residential side than there is on the commercial side, or the large asset size. And that's because on the large asset size, the bank is looking towards the asset to make the payments and pay the property back, and pay back the mortgage. On the residential side, the bank is looking to you and your balance sheet to pay it back. And so once you understand that, you realize, okay, if I'm going to do the same amount of work, why don't I get a much larger kind of nominal return in terms of doing it? And there are a lot more leverage points when you move into commercial versus residential. And just one major point for people just to think at a high level is that the value of the property is determined by the cash flow on commercial properties, whereas on residential properties, it's done by comparative market analysis, or what other residential properties have sold for in that area, irrespective of how high the cash flow may be. So you could have a short-term rental that you use a single family home for, making way more than you would if you were renting it by the month. It's still going to be worth the same for the most part in the eyes of a bank.
Right, exactly. So then when in this process did you decide to start Vernonville Asset Management and branch off into different asset, having a variety of asset classes?
Well, it's interesting. So Vernonville Asset Management was my own management company for my personal investments. And so, we set up an asset protection structure early. And so the Vernonville was the management company. And then we would create other LLCs to hold our single family or our multifamily. So Vernonville would never, even to this day, doesn't own anything. It's just, it's my alter ego in the world. So it signs the contracts and does all those kinds of things. And so when we started bringing outside investors, it just stopped being the management company for my own personal properties and became the management company for all the properties. But all of our properties are then put into individual LLCs, and those individual partnerships are where any employees sit or where any of those kind of things sit. And so Vernonville really is a siloed entity that is a public facing entity. And so I set that up in 2007 when I got out of residency. And so it's always been around. It just didn't function into the public sphere as an investment firm that was taking outside investor dollars from day one. But it's as old as any other LLC that I have, and it's been around, 13 plus 14 years at this point.
Well, I want to talk about a quote that you have on your website that I talk to a lot of my clients about, because one of the biggest things that I think are either not considered or are thought about maybe after the fact is, once I own this and I'm still a practicing physician, how does it operate? So you said, so your quote is, in the real estate space, bigger projects with multiple investors tend to be less risky and more hands-off than smaller projects. And on our larger projects, we hire professionals whose sole job is to manage the project. So my advice to others is to get into larger deals earlier in your career. But the part of this that I find interesting, that we hire professionals whose sole job is to manage the project. So did you start self-managing, and then what was your experience, and when did you start to realize, wait a second, I don't need to have 2 full-time jobs, and there's people that can do this while I'm also doing my job, and just tell me when I need to make a decision.
Yeah, absolutely. I mean, so I still self-manage. I still have dozens of single family homes I manage myself, but I have systems in place. It takes me less than 3 hours a month to deal with it if I really have to. And that's really just when tenants are turning over. So interestingly enough, I never self-managed any of the projects that we brought in outside investors in, right? And so for me, I hold kind of other folks' money in higher regard than mine, if that makes sense. Mm-hmm. And so we just went on the professionalization side of that from day one, just from a fiduciary responsibility and all of those kind of things. And then just, again, from a time standpoint, right? I no longer work full-time in day-to-day in medicine, but it just was the more assets you get, you move into what's called an asset management role, where you're overseeing everything and the reports come to you. But in the end, I'm a pretty good doctor. I'm an okay, property manager, but I don't do that every day. And I don't want to do it every day. But there are people whose sole love is to do that. So if their sole love is to do that, I'm going to let them do that, right? I'm a team builder. I don't have to be the smartest guy in the room. Honestly, most of the time I don't want to be, right? If you look at kind of how we structure, we partner with operators who already are in the space, and we just bring the capital and a little bit of expertise and know-how. I don't want to be the person who has to know everything, who has to do everything, right? Because at that point, you end up with single point failure, right? I get hit by a bus, people's money goes to the 4 winds, right? Right now, if my partners and I were to disappear, the third party management team would just keep running the property, right? You have to bring somebody else in to do the distributions, but I just don't need to be the expert in everything. I need to be the expert in the things that I know, and putting together teams is what I've become expert in. And so once you understand that, your whole world frees up, because then you don't have to be 100% over everything. You can broaden your horizons. And that's very hard for physicians, because many of us are type A. And so we think that we're the best. We've always been the smartest. We're always the best people in the room. We think no one can do it better than us. And I promise you, when it comes to investing, almost everybody can do it better than you. So just find the people who can and partner with them if you want to expand kind of your portfolio. If you just want to have a small portfolio that you're just controlling and control everything, then just do everything yourself. But understand that the pie that is your life in terms of time, there's a portion of that that's going to be taken from other things for you to be able to do this. And so I believe investing to increase your quality of life. And so unless you just love managing property, it probably isn't increasing your quality of life. And I would argue you're probably working hard enough as a physician that you don't want to spend your off time doing kind of this drudgery as it relates to property management, because it's not sexy at all.
Well, it's not. And when, and vendors, the vendors they're not on time because, you can't always, accurately predict how long it's going to take to fix a plumbing problem. And then you're sitting there waiting for them and, you have other things to do. So
Absolutely.
Specifically for my audience, did you find as a physician, and even now, like when you're presented with healthcare properties, is it easy for you to digest them and understand like their purpose, the healthcare companies that occupy them, their location and relationship with the hospital that needs to be there for it to be successful? Like, is it easy for you to understand these? Do you feel like?
I will tell you that, I would hire somebody like you around that who's had that experience. Because, and it's this, right? So my MBA is in healthcare management and entrepreneurship. So I've been telling people for a long time that we're going to value-based care, fee for services is going away, all these different kind of permutations are happening. And then this is pre the private equity wave of coming in. It was pre-consolidation. And so I always tell people that you've got to do the look through, right? You've got to do the look through to the practices that are in there. How much of those practices are Medicare, Medicaid, cash, insurance-based? Who are the hospital affiliations? And so in an ideal world, I'm looking for corporate leases from big hospital systems that are putting their employee docs in there. And then it's easy for you then to pull the financials of the hospital system to see how solvent they are or not, right? Because your leases are on the commercial side are only as good as the companies that are behind them. Mm-hmm. And so even if the physician fails, they're still on the hook for that lease. And so they'll bring somebody else in on a sublease. And so for that, in the ideal world, it's an MOB where the hospital has a large portion of the leases and they're just sticking their own docs in there. The next thing down for me would be probably PE-backed, private equity-backed practices that have already sold. The docs are still partners. They're still on their earn-out, which means they haven't gotten all their money yet. They're still earning that money out. The PE firm, if they're publicly traded, you can pull their data, pull their 10Q and their 10K, see how strong their balance sheets are, and how well they will hold up from a lease standpoint. And so back to that look through kind of situation. And then, I like infill stuff, right? I don't want new office buildings that have been built on spec and it's a new practice and they're trying to figure it out. I like, occupancies in the market 90+%. So these guys are trying to move, they can't, and other people are wanting to likely move in. Because I always tell people about real estate, it's not about your tenant today. It's about how many tenants are lined up behind today's tenant to keep you occupied over the life of your ownership of that particular property. And so that's why I'm mindful about kind of new spec builds or practices that don't have good margins. So that don't have a portion of their cash pay, don't have surgery suites in the offices potentially as well, where they're getting revenue bumps above and beyond what Medicare, Medicaid, insurance companies are potentially giving them. So those are the things that I look at. And I'll be honest with you, that's way more complicated than some of the commercial stuff that we do. But it's the things that you have to think about in the MOB space, because when it's really good, it's super hands off. But when an area is transitioning, so the example is the MOB building I started in. That building has probably stayed 40% occupied through 20 years, and it's literally next to a hospital. And a new group came in and is now demedicalized it, and they're probably 80% occupancy, right? So you just have to be mindful of the trends, the patient population, all of those kinds of things when you're looking at these assets.
And why do you think your MOB stayed 40% occupied across from a hospital?
Because I don't know if we're technically deemed a critical access hospital, but we did the second most charity care outside of our public health system. So it was a bad payer mix. And the hospital wasn't really progressive in recruiting new and younger docs. And some of that is the issue of the older medical staff and kind of how they operated. And so it was just a loss of vision for the hospital and the hospital's lack of market definition. And so they didn't really have a place in the market that they could call their own. They wanted to shy away from being a Medicare and Medicaid hospital, which will make you a lot of money if you lean into it. They decided that they wanted to be a ritzy hospital and go after the rich people, which doesn't really work when we have the top hospital in the state of Texas system in our backyard and the largest medical center in the world 3 miles away, right? So it was just a lack of strategic positioning for the hospital. So it just kind of dwindled over time.
Is it still open?
Yeah, it's still open. It's still, I mean, literally, we're the ones who are invested in the hospital. So yes, it is still open. It is still open. Yes. They're shrinking their footprint, but it is still open.
So what are your thoughts for a physician in private practice? You know, they're a large practice. They have many sites. What is your thoughts on them owning, trying to find a piece of real estate that they own, or even purchasing a larger property and occupying part of it, either bringing partners in, to fill in the rest, or, leasing out to other tenants. So what is your thoughts just as a investor and a physician, what do you think about that as an investment for a private practice?
Yeah, if you're going to be in practice for 20, 30 years, I was told day one, like, if you're going to go into private practice, buy your own building. I was told that immediately. I decided not to go into private practice initially, so I didn't, but we actually did look to buy that MOB years ago and just couldn't make it make sense. So I was always kind of looking. But if you're going to be practicing for a while, that you've got partners that are going to be in there. If you're going to be a partner emeritus, yes, absolutely. Just because you're going to be able to control an expense line, and you can income shift some. And so, get with your tax accountant and those kind of things, but getting your income through rent is more tax efficient than getting your income directly through your medical practice, because one is ordinary incomes, one is passive income. One has a lot more deductions on it than the other. And there's a way to do some income shifting. Again, get with your tax professional about how to best do that and stay in IRS compliance. And so there's just a lot more that you can do with it, right? Get to the point where you're retiring, you can have other docs come in and rent from you. You can completely turn it over. Someone can buy your practice out, then they're renting from you. And it can be a part of your real estate portfolio in retirement as well. So I'm absolutely a fan of it if you're going to be practicing for a while.
Yeah, and I see some successful practices, even you talk like the succession plan, they're able to use it to also help recruit younger physicians. And, as older physicians are wanting to slow down sort of thing. So, they can use it to their advantage of that as well.
Yep. You just have to think about it, right? You have to think about how you're going to divvy up the shares, how you're divvying up the shares. Do new practice partners get a share in the building? Getting the valuations done. It's a way to potentially, as people are retiring, they can sell their proportional share out to the younger guys. It just has to be fair, right? You have to be thinking about it on the front end, and it just has to be fair from that standpoint. And so, going into it, you want to think about those kinds of things and what that looks like.
Absolutely. Well, Eric, we're going to move into the Q&A part of this interview.
Okay. Get
to know you a little bit. So what was your first job?
I was a custodian. No, shoveling snow and that kind of stuff. I was the basic neighborhood handyman growing up. And then I was doing custodial services for an art gallery that my mother was on the board of, kind of janitorial kind of stuff. My tastes outstripped my parents, what my parents wanted to spend on me. So I was always happy to work extra to get the brand name and designer stuff that I wanted. So hard work was never an issue for me.
I like that. What else would you want to be doing for a living?
No, nothing. I invest, I practice, I have like the best life in the world. So, and I control my time completely. So there's literally nothing, like I have to work right now to fight to stay out of having a new job to fall into, because right now I control my time. So no, I wouldn't change kind of what I'm doing at all right now.
Very nice. Who are you reading right now for news, information, or inspiration?
I've really discovered Twitter now. Like I had always had a Twitter account, but I wasn't paying attention, but there's like some really smart people on there. I don't engage in snark. I save that for Facebook groups. So I just take in, and then occasionally if people make some bad mistakes on real estate, I'll give them some data and give them a different kind of way to think about it. But right now, Twitter is a big thing. I go to Drudge Report so I can get my stuff kind of on the right. I might go to Huffington Post to get my stuff on the left. BBC, Guardian, those kind of things. But I'm relatively selective about what I take in because, we've got 9 billion people on the planet. So we are a growing species. nothing is ever really that bad for us in the West like that. So I tend to control the amount of negative information that comes to me because I just bet on humans, and I'm pretty sure that we're a hardy species. So, we'll get through whatever we need to get through. I just have that faith.
What is one thing you do every day for healthy self-care?
Decide what I'm going to do. So I have gotten to the point where I do what I feel. And I'm really, really analytical, but what I do is I listen to my body. So if there's some days I'm like, you know what? I'm going to stay in bed till 11 o'clock. I'm not going anywhere. I'm going to do this. And so I do what I feel a lot more, which I didn't as a kid and growing up. The older I get, the more I get in tune with just how my body is motioning and how things, and I just realized that things work out. So I don't need to press. So I'm just wildly conscious of how I'm feeling at almost every moment. And then I just adjust accordingly.
Nice. How many kids do you have and how old are they?
2 little girls are upstairs right now running around because we're about to go out for some stuff. They are 12 and 9.
Oh, very nice. That's a great age. All right. 2 more questions. Are leaders born or trained?
Both. So everyone can be trained to be a leader, but there are some people who are naturally, just for whatever reason, are naturally assertive. But almost everything outside of kind of maybe raw athletic talent can be trained. You can be trained to do almost anything at a more than acceptable level if you put the time in.
I like that. And so I when I interview physicians, this is a question I ask them. So since you're both, I put both on here, but do you feel clinicians are born with the desire to heal, or do they learn it through their medical training?
Both. So I knew I wanted to be a physician at roughly age 6. And anybody who knows me from back then will tell you, like, oh yeah, you became a doctor. Well, you said you were going to, right? And so my youngest has kind of that natural kind of for animals. And we went camping the other day and someone got stung by a bee and she just came into the tent, grabbed something and went back out. And I'm like, okay, what's going on? And she came back. She's like, oh, somebody got stung by a bee. I just took the first aid kit and all on her own, right? So I was like, oh, okay. And she's 9, right? So I think some people have a natural kind of calling towards helping others in that way. And I think some people go to medical school or intellectually curious, and then they use the science of fixing the problem that is the human. And they use the medicine to be able to do that in terms of kind of that intellectual curiosity. They just have to be trained on bedside manner. And so that's, right now we're very much skimming off those who test very well. And I think we're losing something as it relates to kind of the human connection around that. So, but I won't get on that soapbox today.
That's a whole other half an hour.
Yeah, it's a whole different discussion for a different day.
Well, Eric, thank you very much for your time. This has been a wonderful conversation and I appreciate it.
No, Tricia, thank you for having me on and happy to help in any way that I can.